Mid-cap funds are like teenagers of the stock market, full of energy, full of potential, but also a bit unpredictable. Bank of India Mid-Cap Fund aims to tap into that sweet spot between stability and aggressive growth. But is this fund the right fit for you? Let's find out through an in-depth analysis in this video. Hi there, welcome back to holisticinvestment.in, where we help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. Now, before analyzing this fund, let us first understand what the mid-cap fund is about. So, a mid-cap fund invests in medium-sized companies ranked between 101 to 250 by the market cap category, and also they offer a mix of growth potential and moderate risk. It aims to strike a balance between large and small cap funds, and returns can be higher than large cap but with more volatility. So, success depends on smart stock selection. Mid-caps are less stable, so the fund manager's skill really matters here. So, as an NFO, it opens on 31st July 2025 and 14th August 2025 is its closing date. So, some of the key features of the NFO are: this is an open-ended fund type which belongs to the category of equity mid-cap, and it has Nifty Mid-Cap 150 TRI as its benchmark index, and there is an exit load of 1% for redemption within 60 days, and there is no entry load, but the minimum investment amount required is 5,000 rupees. So, the fund manager for this NFO is Mr. Alok Singh, and according to the riskometer, the risk involved in this fund is very high. So, the primary investment objective of this fund is that it seeks to generate long-term capital appreciation by investing predominantly in equity and equity-related instruments of mid-cap companies. So, now as we have a basic understanding about this fund, let us now move on to the analysis part of the video, where we are going to analyze the pros and cons of investing in the Bank of India mid-cap fund. So here, let us first understand the pros, the advantages. So first, focus on high growth mid-cap companies. The fund invests in companies ranked 101 to 250 by market cap. So typically firms that are expanding fast and gaining market share. Number two, better return potential than large cap funds. Over the long term period, mid-cap funds have historically delivered higher returns than large caps, especially during economic upcycles. Number three, diversified across sectors and businesses. So the fund doesn't rely on a single theme, it spreads across industries to reduce concentration risk. Number four, good for long-term wealth creation. So with the right time horizon and discipline, mid-cap funds can help build significant wealth through compounding. So these are some of the advantages of investing in this NFO. Some of the disadvantages, however, are: number one, higher volatility and risk. Mid-caps are more sensitive to market fluctuations, which means sharper corrections during downturn period. Number two, requires a long-term investment horizon. So short-term investors may be disappointed by the frequent ups and downs. This is not a fund for quick gains. Number three, performance heavily manager-driven. Mid-cap investing needs deep research. So the fund's success depends a lot on the manager's ability to pick quality stock. Number four, may underperform in bear market. So when markets are down, mid caps often take a bigger hit than large cap, which could impact your portfolio stability. So these are some of the drawbacks that you need to keep in your mind before deciding to invest in this NFO. So now, what is the final takeaway? Is investing in the Bank of India mid cap fund worth it or not? So this fund brings access to India's rising companies with strong long-term growth potential. It's a fit for investors who can handle some short-term volatility and are looking to stay invested for at least 5 to 7 years. But like all mid-cap funds, this one isn't for the faint-hearted. If your goals are long-term and you're okay with short-term bumps, this may be worth exploring, ideally with guidance from a certified financial planner. But our personal recommendation is that if you do want to invest in a similar theme or in a similar mid-cap fund, there are existing mutual funds that have track records for minimum of 7 to 10 years, where you can take a calculated risk by analyzing how it has performed across all market cycles. But here, as this is an NFO without proper portfolio and research, investment here is risky, which is like taking a blind risk. So if you do have some surplus fund and you just want to see how it's performing and you do want to invest in its initial stages, then you can invest it through a satellite portfolio, not through your core portfolio, as a trial with minimum investment, and then over the years, if it's performing well, you can increase your investment amount accordingly. But if you do want to invest, definitely consult with your financial planner who will look into the suitability of the investment objective, risk profile, overlap ratio, and allocation for more professional guidance, which will help you in the long term period.
And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.